Welcome to Caching Waves. This is an Elliott Wave update for ICP. I know it's been a little bit, and there's been a lot of action on other coins, and this one hasn't really moved much. So I'm going to give you my current viewpoint on the micro as well as on the larger trend. First off, we have 5 waves up to the upside, up to the standard extensions we'd expect, just past 1.618 for our third, shallow retracement for our fourth, and the fifth hit at the 2.382 extension. Off that, we had a 3-wave move to the downside, and looking for a 3-wave move here to complete or come straight down from here to hit the 1-to-1, and we'd have a 3-wave move complete at around 869.1, or we come up and make some sort of flat pattern. If we make a higher high above the 5th wave, we protect this A wave low and look for our 3rd wave after the fact. Now, as of right now, the 1-to-1 extension in time to correct this entire move is over at March 28th, is more of a guideline, but when we'd expect this correction to be completed. And the question is all in this area, which is very difficult at the moment, is whether we get this higher high first, then we make our matching leg, and we're still in this B wave, or do we just grind down slowly from here to the downside? So let's look at that on the smaller time frames. If you watched my video last time, I was looking for this to be an A, B, C complete here at the 1-to-1 extension. I had my stop at this level, got stopped out on this one. This is why when I make videos like Manta, I show you so many things can happen when you start with 3 waves here that it's very, very difficult to trade with any sort of high leverage. Ideally, the setup was take your entry here, stop at this low and leave it. But if you want higher leverage and a larger position size, that's where you take more chances in these situations. At least I do. So as of right now, it's quite unclear. I'll show you on this wave here. But if we're going to get this B wave up to the 1-to-1, that's at 1726, and that is assuming a bottom is in, and we're looking for a 3-wave move. Partnering this W wave to the upside, like so, and then we'd come back for our C wave. So that's assuming our bottom is in those targets. Obviously, we want to come up to the 1.236 and 382 up here at our X or B wave zone of this A wave. That's where those extensions come from in the most common area, and then get our C wave. If that happens, then we protect this low in our long in the future. So as of right now, is there a trade worth taking? So like I mentioned, we have 3 here. We've passed the 786 retracement of this move already. So this can turn to the downside and just grind its way down to that C wave target at 869.1 in gray. Like so. So the question is, do we get one more wave up or do we go straight there now? Now there is a trade available. It is high risk, just to warn you. Not financial advice. You can do whatever you like. I haven't decided yet if I want to take it. I want to see a little more price action here. But this is a very difficult wave to count. Right now I just have it labeled as a Y. But the issue you will see here is off the low we have 3 waves. Clearly 3-wave pattern. Here, let me zoom in a little bit here. Clearly a 3-wave pattern. There's no way you can make that 5, right? And we have 3 back and 5 to the upside, potentially. So to me, that looks like a flat, a 335, correcting to the upside. So this would have to be some sort of diagonal if we're making that downside move. A, B, C, X, A, B, C, X. This would be a double. A, B, C, X, A, B, C. So that would be a double if that was a diagonal. It does fit, and then we have a flat, so there is a chance we just continue to the downside here. So that works. The way it would be bullish, and I'll show you that, is if we have a truncation, which is also possible. It's unlikely, it goes against guidelines, but I just wanted to show you that. And that would be similar where this is a 5-wave C wave. And that would be a ABC, X, ABC, X. And this is where it would get a little bit difficult. And that would be, we have 5, 1, 2, 3, 4, 5. And then we have either a triangle, as an A, B, C, D, E. And that's our 5th. And we truncated, like so. Or yeah, that's probably pretty much the only way that could be the low. But as you can see, it goes against guidelines. So the question is it worth taking the trade, right? You can make that decision for yourself. Let's see where we're at on retrace. We're right around at the 50, coming close to it. How are we on linear? No, a little further away. So it's a difficult spot. It looks like we could come back and this could grind up and then we collapse for that C wave. Or if this is the low and we have a truncation, the way that would play out is this would obviously be 5 waves. We'd expect a 3-wave pullback here between the 50 and the 618 of this wave. So it's either in or we get a slightly lower low and then we go. But then you're worried about that downside at the 1-to-1 at this 618. You're like, okay, is that all we're going to get, right? And we come to the downside. So you can see this difficulty in this area. What I would do myself, again, I'm not sure if I'm going to take this trade or not, is assume this is a low. If I want to play the long, throw on my retrace. Oh, fib's not on. Looks like ABC, XBC, C. Yep. So we could get one more low here. And what I would do myself is I'll wait this one out. If I were to take this, similar to Manta, as I explained to you, I'd wait this one out, wait for it to break this high. And once it breaks that high, I'll be triggered into the order, but stop will still go at this low in the meantime. Reason being, in case this comes up in 3, even if we're breaking out and it comes back and makes a expanded flat, then goes, at least I'm still in and I won't get stopped out here. Or if you want more of a position size, realize that you will get stopped out in an expanded flat, but if you buy the breakout rather than this area, you put your stop there. That gives you more of a position size, basically double. So that's how I would trade it if I'm going to go to the upside. But it's not a great trade, just so you know. It's not high probability. I'm pretty much neutral at this point, whether we go up or down from here. But I will be watching this, and I might take it. I haven't decided yet. But absolutely my stop would be at this low no matter what. So let's see where that would put us for a risk reward. That's kind of how I decide to take something or not. I say, okay, we buy at the breakout above, stop goes at this low, up to the 1-to-1. Is it worth a 3-to-1? Is this a truncation more than you know, 1 out of 3 times it fails, I don't like it, to be honest. I'm probably going to miss this trade if it goes up there, and I would look for the short after. So unfortunate, I know, but it's just not worth it to me. Now, if it was a better trade setup like a 10 to 1, I'd be more likely to take it, but there's not enough probability for me personally to take a trade here. Again, I'll miss it if it takes off from here, but I'll be looking for the short after. And if it just comes up for one more, comes to the 618 of this move and starts to fall from there, I'll be very interested in a buy down at 869.1. And that would take us to a larger move where this is potentially a 1 and 2. I wish I had a more probable count, but sometimes you don't get that. You just have to play with what you get in Elliott Wave and try and get on the right side of things, right? And as of right now, completely neutral, have no bias, so I'm going to wait this one out. All right, guys, that's it for ICP. If you want to follow my updates on Twitter, it's at caching_waves. Check out the playlist if you want today, and I'll see you on the next one.